Is swing trading better than scalping? Or is day trading the best way to attack the markets? What's the difference? What's most profitable? Let's discuss. Now, the most common question that I get asked by aspiring traders when they meet me for the first time is what trading approach is most profitable? Do scalpers make more money than day traders? Is swing trading more profitable than day trading? Basically, the answer is there's no one answer that fits all. It does indeed depend on a number of factors and based on personal circumstances, trading objectives and the like. And maybe not as obvious, but one of the other important factors that you should consider is your personality traits. Because after all, a lot of trading comes down to psychology. Now, let's first of all define what the different approaches are. First of all, you've got day trading. Now, the way I describe day trading is someone that sits in front of his computer for several hours a day, looking to enter and exit trades within that calendar day. Now, that of course doesn't mean that he'll never hold trades overnight. Sure, of course he will, but he generally doesn't. He generally closes them out within the calendar day. Now, to be a day trader often means you need to be working it around your day job, certainly when you're starting out. But there are, of course, many aspiring traders that simply have time on their hands during the day to be able to trade. You could be retired, or you could, in fact, have given up your day job to embark on this new trading career. But generally speaking, a day trader has 5, 6, 7 hours a day in order to analyze the charts, looking for trade opportunities that may appear several times a day. A swing trader, on the other hand, is looking for longer term trades, generally on the higher time frame charts. Now, swing traders can be anything from a couple of days to a number of weeks. Now, you can be a short-term swing trader, in which case you'll be looking at maybe 2 to 5 days, but generally less than a week. A medium-term swing trader can be anything from a week out to a month. And a long-term swing trader, now that can be measured in terms of weeks and indeed months. Now, at the other end of the spectrum, you've got the investor. And these, of course, are looking into months and indeed years, all very broadly speaking, of course. Now, at the tighter end of the scale, you've got the scalper, which is very time sensitive. Typically, you may be in a trade for a matter of minutes or indeed just a few seconds. As the scalper name implies, you're looking to scalp out small, tiny chunks of profits multiple times a day, having multiple trades in a day, hoping to have more winners, of course, than losers. So, which approach is more profitable? Well, let's first look at the scalper. Now, it's a very popular form of trading, partly because of the thrill factor, especially in the Forex market, where it's so easy to enter and exit the trades, so easy to set up a trading account with a very small amount of money. Now, a person with a day job that has just a few hours a day, limited time to spend in front of the screens, may be attracted to scalping because the potential for profits and indeed losses, they can happen very, very quickly. And if you're limited to the time in front of the screens, then this could be an attraction for you. Scalpers will generally risk just a small percentage amounts of the account so that no one trade will affect them adversely. But for the small risk, the gains are equally small on each trade, but the intention clearly is to have more winners than losers. Now, for gamblers, the natural reaction when they're losing is to fight a losing streak with bigger risk on the next trade. And this can cause huge problems in your trading. So you've got to make sure that if you're going into the scalping methodology, then you don't have these gambling traits. A trader that comes into trading for the first time and starts off with the scalping approach will generally have that gambling tendency, which can be indeed very dangerous. Brokers generally love rookie and aspiring traders that elect the scalping approach when they first start off. Why? Well, because most of them do end up blowing up their $500, $1,000 trading accounts, and in the meantime are paying the broker lots of commission for the joy of doing that. Why is it, do you think, that most of these brokers will offer huge bonuses to get you into trading in the first place? Why is it that they offer huge leverage? Well, I'll tell you why they do it, is because they know that the majority of guys that come in, the guys and girls that come in to trading for the first time, using the scalping approach, will end up blowing their account. Now, don't get me wrong on this, okay, because there are some very successful manual scalpers out there, and I know quite a few. However, I think it's fair to say that it's not advisable to start your trading journey as a scalper. Things can happen very quickly. You've got to be able to react very fast. The multiple adrenaline highs and the lows can be very hard to deal with, and you need to have experience so that you know how your emotions will react in these conditions. To be a successful scalper, you need to be extremely disciplined. Okay, you need to be able to control your emotions and the adrenaline rushes that this trading does indeed provide. Now, indeed, if you are one of these people that can control your emotions, control the discipline, and you can handle these adrenaline rushes, then indeed you could possibly make a very good living out of scalping if you know what you're doing. Personally, for me, I find it just way too stressful. I don't know, maybe it's an age thing. But certainly in my earlier days, when I was trading in the pits of London, we were basically scalping, and it made many traders multi-millionaires at a very early age. Some lost a lot, and indeed some actually even lost their hair. Then you have swing trading. Now, this is trading at a much slower pace. Traders are able to do their analysis in a short period of time, perhaps at the end of the day or even in their lunch break, whenever work permits. It's great for those that just have maybe 10, 20, 30 minutes indeed to spend in front of the charts. They analyze the markets and they place their trades possibly with a pending order. That's basically waiting for the market to come to them in order to execute. Their analysis is over a longer period of time. After all, they may be in the trade for a few days or indeed weeks. The emotions and stress of a swing trader is considerably less than a scalper. And remember, most traders that lose because of the emotions that get the better of them, not the fact that they called the market wrong in the first place. Now, the price action signals are also debatably more accurate over the longer time period projections as well. Now, if you want to trade fundamentals play out much bigger on the longer time periods. So if you're using fundamentals and technicals, sometimes a swing trading approach can be much more powerful than a scalping approach. Now, a swing trader may risk 0.5 or 1 or even 2% of the account on each trade, because less trades will be taken. So the chances of a complete wipeout are also going to be lessened by the fact that you're trading less. Using 2% as a scalper could be disastrous. Let's face it, you could easily have 10 trades on the bounce as losers. That would put your account down 20% as a scalper. That means you've got to make 25% just to get back to break even. Now, in the middle, we have the day trader. That's basically what I do. Well, I do a mixture of day trading and swing trading. So I'm able to spend multiple hours in the working day analyzing the markets, looking for the high probability trade setups, looking at the 15-minute chart, the 1-hour chart, the 4-hour charts. I have time to sit and wait for the trades. If none come along, it doesn't bother me. I know there will be some trades coming down the line in the future. We don't force trades as a day trader because we have time on our hands. We're not limited to just an hour a day. We've got plenty of time to analyze the markets. We are patient traders. We may be risking 0.25% or 0.5% on each trade. And we may just have a few trades in a day. Maybe some days we won't have any trades at all. But the emotions, again, are a lot less than they are with a scalper. I know I can handle the discipline and the emotions of day trading much greater than I can if I'm in and out of the market on a dime. The signals using the higher time frames, such as the 1 hour, the 4 hour, can be quite powerful if you know what you're looking for. It stands to reason that the less trades you take, the less stress you'll be putting yourself under. However, one of the biggest problems that I've found over the years is that many that come into trading for the first time, they have a limited amount of time on their hands, maybe a couple of hours a day, so they start off by day trading. And they're going to get themselves frustrated because the trades aren't coming their way. And they take trades that are simply not there, which can often and more than likely lead to losses in the trading account. So if you're embarking on a trading career and deciding which approach you are more likely and best suited, I would say you've got to analyze firstly the time permitted that you can spend in front of the trading screens. Then you've got to look at your personality. How disciplined and emotional are you? You need to consider your objections. What are you coming into trading for? Are you coming in for a bit of fun? Are you coming in to supplement your income? Are you coming into this to eventually give up your day job or trade full-time as a professional trader? So all these considerations must be taken into account when you're considering which trading style to adopt. My advice is this, quite frankly. If you're an aspiring trader coming into trading for the first time, you start on the much higher time frames, the swing trading approach. If you're starting on the swing trading approach, you're not going to let the emotions affect you as they do with most traders. And emotions are the killer of most traders, believe me. So start on the higher time frames, and as you get proficient, then you may work yourself down to the lower time frames. Scalping is great for those that have the high temperament, the high discipline approach, but for most of us out there, that I think is few and far between. Look, I hope you found that useful. If you liked my video, the content, please, as always, give me a thumbs up, give me a thumbs down if you thought it was a load of old tosh. Leave a comment below and I'll always get back to as many as I can. Subscribe to the channel if you haven't already done so, and of course don't forget to follow the Instagram as well. Till my next video, good luck with your trading. Speak to you soon.